What's up, everybody? So, the disclosures, as always, this is for entertainment purposes. This is my opinions. These are my thoughts. No one else should follow my advice. Do your own research. Make sure that you understand investing is risky and you can win or lose money via investing. So, I just wanted to show some information that I think is going to happen at exactly 12:15 Pacific Standard Time, and we'll give some theory on why this is going to happen, and just talk about what's going to happen and how to play it and how I'm going to play this 12:15 time frame. So currently, GameStop, we have a lot of call options, we have stocks, we have a lot of money invested into GameStop here, and overall today it is not doing that great. It started off around $110 and spiked up to $142, as you can see here. So a very, very nice bull rush on the opening. This was kind of anticipated. You know, the anticipation, the hype was good, and then the bears come out and start shorting, and trying to push the stock down because they do not want to pay all of these options out. They do not want to lose billions and billions of dollars. And it was reported now in the last 2 days, all the hedge funds that are shorting this have lost approximately $2 billion. So this is anticipated. You can see we now know the bottom wall here is $86. This is the very big wall that we talked about yesterday. $45 was the first wall that we, pretty much clear as day says we're not going below $45. No matter what happens, not going below $45. Well, we had the $100 wall and that got tested, that got defeated, and it went down to $86 now. This is our bear wall that we have. We don't know if it will hold on another massive short rush down. So $86 is a very, very important thing. But at 12:15, we have a delta deleting hedge thing. I don't know what it's called, but at 12:15, we're going to have a lot of delta being eliminated from the marketplace. Delta comes from the options market. And if you look over here on the Yahoo Finance, we showed you this a couple days ago. I love this. This is great. A lot of data. It shows you how many open interest, which means how many open contracts there are. This is for this Friday. So contracts that are expiring today. And why 12:15, give or take a minute or two, is very, very important is because this is when Robinhood will automatically close your contracts. This is the time that Robinhood automatically can close contracts. It's what happens. This is the rules of the game. If you have a contract that is in the money and you don't have the actual money to fulfill that contract, so if you have, 50 $35 call contracts, but you do not have the, $15,000 or $30,000 or whatever the amount of money it is to actually buy all of those shares that the contracts represent, they go ahead and close them out. And this is very important because the market makers are the ones that are closing these out. So they are hoping and praying to close out a ton of these contracts, and most likely they will because a lot of us do not have the thousands of dollars that it's going to require to buy all of the shares. You can see when we did the data pool the other day, there's around 50 to 75,000 open interest contracts, depending on how far you go up on this ladder. So around this $100 price point, there's around 50,000, give or take some. If we went up a little bit higher to that $200 price point, we would then end up having around 75,000 contracts. So 75,000 is a lot, 50,000 is a lot. And a lot of these are going to get expired on that 12:15 mark, which means all the delta that is built up in these contracts. If you can take a look here in this, in the options market, we are on Webull over here. So if you're wondering what this is, what you're looking at, this is Webull. So if we click on the $100 contract, we can check it out. We can see here, and this is the delta that we're talking about. So currently, if you have a $100 call contract expiring today, the market makers are hedging. They have bought 59 shares to hedge against this bet being in the money. Once 12:15 rolls around and you don't actually have the money to buy all of these 100 shares from the market makers, that means these 59 shares are going to get sold instantly on the marketplace, and it's going to crush down the price of the stock. So I don't want you to be alarmed. I am bullish. I do think the stock will go up, but you are going to be seeing a massive delta decrease in 12:15. So I want you to know about this. What I'm going to do is I'm actually going to sell some of my contracts beforehand, the ones that are generally expiring today, because I do not have the money to fulfill all the contracts. So I'm going to sell them a little bit before that 12:15 time, and I'm going to buy some puts next week to gain some value on this downward spike. The spike is only going to happen for about 5 to 10 minutes. It's going to be a very quick downward spike, in my opinion, and then it's going to jump, skyrocket up. So we're going to have about a 5 to 10 minute window, I think, of buying some great value. So we're going to buy those puts before the spike, around 12:10, and then we're going to sell them at around 12:16 is when we're going to sell these puts. Then at that time, once we're going to take that profit from the put money, we're going to put it back into call options for next week, and we're going to ride this wave back up. So if this works out exactly as I think this is going to be, this is going to be a massive increase in value here, because you're getting value from the call options that you currently have. You're selling some positions that are going to be expiring, fairly soon today. You're getting pretty much the maximum value you could out of this for these positions. You're going to buy the put, you're going to downward spiral, and you're going to gain value on that put, and you're going to sell it like instantaneously. And then you're going to buy back call options to hedge back up again for the bullish upward trend that we're going to see next week. Because again, once all these delta shakes out, people are going to be pushing back in, because some of these are not going to go to zero. So some of these contracts are going to go from 59 to 100. That means they're going to be executed and they're going to have 100 shares. So you have to take that balance, but majority of these guys are going to expire with zero delta, because the market makers are going to close them, because the people on Robinhood do not have the thousands of dollars required to actually buy all the shares. The big dogs might come in and swoop in some of these contracts as well and pick up some things very, very cheap, and that's why you're going to see this just big V downward and then upward. We saw this several times in the past, so I'm about 95% confident that this is what's going to happen at, again, that 12:15, give or take a few minutes. So this is my thoughts. This is how I'm going to play this situation right now. 12:15 Pacific Standard Time is very, very important. That's around 50 minutes from when this video has been uploaded. So I will talk to you guys later. Thanks for watching, and as always, make sure that you are ready and expect the unexpected too.